All right, if you're unprofitable and still losing trades, you don't know where the market wants to go, you can't find an actual direction, and you're not accurate with it, this video is for you. I'm going to teach you how to stop losing trades, how to identify where the market wants to go. I'm going to teach you about things like liquidity, imbalances, and that's pretty much it, not going to lie, because I keep it very, very simple. A little bit of market structure in there as well, but this video is for you, so please stay tuned. So looking at this chart, the first thing you want to do to try to identify where the market wants to go is come up with a bias, whether we're bearish or whether we're bullish. Bearish meaning market's going down, or bullish meaning the market probably wants to go up. So let's try to identify that real quick. How I use it is for value gaps, inversions. I look at rejections and things like that nature. So I look a day or two in the past, maybe even three or four. So this is our day right here. Let's look at what's left of it. What's in the past? What aligns with this chart right now? What aligns with this area here? This over here. What is this? This is a bearish fair value gap, and we completely filled it. As you see, price comes all the way up to the top of this, and then it continues to drop. That's a pretty good sign that we're bearish. And what happened here? We have another bearish fair value gap. Price comes in, drops. Price comes in again, fills it all the way, drops. So these are imbalances. Once these imbalances get filled, they usually continue with their market structure. So if it's a bearish imbalance, it's usually going to continue with its bearish movement. As you see, this is a bearish fair value gap here, bang bang right here, and then price comes into it, drops. Now, how to use fair value gaps? Fair value gaps are imbalances, just like just as I said, when imbalances get filled, they usually continue with their market structure. So what's the market structure of this market structure? Bearish. This is a bearish fair value gap. You see price filled it, and then it rejected it. Bang, it went down because it's bearish. You see what's this right here? Another bearish imbalance. What happens here? Price comes into it, fills it, and drops again. So it seems like we're pretty bearish on the day already. Now, next, you want to find points of interest, as in other imbalances that haven't been filled, or liquidity. So as you see here, we don't have any close imbalances that haven't been filled yet. This is an imbalance here. Imbalance and fair value gaps are, I say they're the same thing. I use them basically the same thing. Other people will argue. All you need to do though is be a good trader. So that's all that matters, bro. Argue with your mom. But look, here we have a bullish fair value gap. Bang. It is filled technically. It technically is because price is pretty deep into it. So it's valid to move back up. And so this is not untapped. So I wouldn't say price wants to come back to this. But one thing I can say is liquidity. So if you don't have any imbalances to go towards to try to target, then you want to look at liquidity. Where is our liquidity? Liquidity is above highs and below lows. So for the sake of this video here, liquidity, oh my gosh. Liquidity is above highs, right, like this. Liquidity here as well. And then below lows, as in this right here. Just like this stuff right here, right? With that being said, not all the time though will we take random points of liquidity like this, but this one, actually, let me slow down. So now I want to find points of interest of liquidity. We have a Tokyo high, and then we have a New York and London low right here. So depending on which one of these gets swept first, if it does, that's where we want to try to look for a trade, if that makes sense. Or we want to look for a trade going into this zone. So there's two ways to trade. For instance, if the market does take this Tokyo high, you could have either traded into it and then caught it down, or just traded into it, been done for the day, or waited for market to come up to it and then drop down. Okay. So with that being said, the same thing could happen here. You could wait for the market to just take it and then you go back up, or you could take it and go back up, or you could just take it and be done. Pause. Why am I saying take it like that, bro? Pause that, bro. No Diddy. No Diddy, guys. Just keep up with this free sauce. But not that Diddy sauce. But look, bro. So there's two ways to trade it. You can either trade down into it, or you can trade off of it. So you can either trade into the zone or off of it. You can trade into this zone or off of it. Or off of it. Or you can do both. Bang, 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 bang. Chitty, chitty, bang, bang, bro. You feel me? So look, Now, another point of interest I want to point out. If there's liquidity inside of imbalances, that is a very, very key zone I like to point out. If my charts will work. So here we have an imbalance, a bearish imbalance, and we see it is respected. But as I said, there's liquidity above highs. Liquidity is money. If the market moves past money, it's taking it, and it can go lower or it can keep going higher. But it needs that money. So here's a high within an imbalance. So if market comes back up here to take this high, it's most likely going to drop again. One thing I also want to point out though is that this is a rejection wick. An hourly rejection wick is probably a really good trading idea. But we're not gonna get into rejection wicks. Rejection wicks, basically what happens is you get this big move down and then you get this really, really long wick of a candle, and then you get a bullish movement to the upside. So this is a bullish rejection wick, and I'm pretty sure if like we see price come down into it, it's just gonna reject back into the upside. So look, right now, if you're just trading this, you should get a buy. And then look, bang, right to that zone. And then look what we have here. It's going right up to this liquidity mark. Will it take this high though? That's what I want to see. No, not yet. Well, it did in Tokyo. Excuse me. It did in Tokyo session. But you see the points of interest and how they work. Point blank period. You see how the points of interest worked. All right. So now I'm going to teach you a little more in depth of how I trade sometimes. So look, here we have 9:15. We're on the 15-minute time frame, right? So here's our London high and our London session low. So here's our session high and low, right? So me knowing where we are, we're pretty bullish, not gonna lie, but we're in a zone that here. So look, we have a bullish fair value gap here. Price respected it and then dropped. So already knowing that we respected it and dropped, we can kind of anticipate a sell, okay? But here's our liquidity. Here's how you use it. Here we have liquidity, right? And here we have imbalances to the downside here and here. Okay, untapped imbalances at that. That means the market has not, price has not went into these zones to go higher. So the market probably is going to want to do that later. So look, let's go to 2 minute. So we have our high and low. What happens? Do we take the high? Bang. So off rip, we take our London high, our session high. Now, me knowing that we took our session high, it's very likely that we make a trade to the downside, especially with this rejection wick. So now look, with these wicks that we're seeing right here already, so with these wicks right here that we're seeing price go up, and then we're seeing it come back down. So we're seeing sellers are coming right now. Pause, bro. Oh my gosh, I'm acting like Diddy, bro. Like I'm actually. Look, bro, sellers are coming in and they're pushing price down. If you're bold enough, you can low-key get in right here just knowing that sellers are coming in and we already swept our London high. But if you're waiting for more confirmation, we can find a setup out of that. Bang. So right here, honestly, okay, this is a liquidity sweep. So usually I wouldn't get in here right away, but this is a liquidity sweep. We're not even gonna talk about that today, not gonna lie. But honestly, this is a pretty good trade just to get in, simply because we already know that we swept our high. Literally. So what happens? Bang. Price falls off the map. Now, when this tanks down, we're not going to talk too much about entries today, but when this tanks down, we do want to aim for the most, which is our low down here. What happens to our low? Do we take it? As you see, price is most likely going to drop all the way down, or at least close enough to it. Will it take our low, though, is the question. Bang. And as you see, just off of this movement, you could have held from any position up here, even down here at lowest, and held it all the way down to our London session low. This is how you identify where the market wants to go. Not everything's about imbalances, but everything is about liquidity. I won't lie to you. So we swept our own liquidity already. We see the sellers coming in. We get multiple setups to go to the downside. But how do we know where to target? Where's our London session low? Where's our nearest source of high impact liquidity? When I say high impact, I mean over the overall low or the overall high of the session. So here we have that, and here you see it. That is how you identify. So what do? We targeted at 9:30 our London session high, and then after that we made multiple setups to the downside. How do we know where to go? Well, you didn't take your London session low. Go ahead and take that. Bang. Imagine you catching that trade from anywhere up here. That's an insane amount of money. Bang, bro. That's how you do it. And that's pretty it. That's pretty much it, not gonna lie.